Boom. And just like that, we're back, Pat. Happy Thursday to you.
Same to you, Rick. Once again, feels like we just talked yesterday. The way time flies.
That's right.
Can't
Well, I
believe,
took a
can't
2 day
believe we're
break and
June.
went up to Strawberry, which is north of Payson, and went to the Strawberry Inn, got a little cabin, and it was 72, 75 degrees, just perfect. So if anybody has never been up to Pine and Strawberry, I highly recommend it. And you know what the nice part is? We've been getting all those early rains now for the first part of June, so their fire danger has really been tamped down. Because normally up there in June, you're kind of on edge, waiting
Yeah.
for the next fire to break out. But there's some interesting things I see in the numbers today, and I want to share with you what I'm seeing and my not theory behind it, but we've got a pattern that I've seen before that's coming and emerging now. And I know sometimes we get comments that go, "Oh, you do this once a week. I mean, real estate doesn't change that fast." No, it doesn't. But sometimes inside the numbers, you see a pattern. And today I do. And it's interesting. It starts with expired listings. They jumped to 1,663. Normally they're about 250, but it's the end of the month. So June 1st, it spiked up. Inside of that number is 890 canceled listings. That also spiked up. They tend to spike up in June here in the Phoenix market for, weather reasons. I wasn't going to be traveling a lot this summer. Let's take the house off. I don't want it listed during the heat. And so that tends to go up every July, but our expired listings are jumping by quite a bit. But here's the interesting part. See down below here, back on the market, homes that were taken off the market either through canceled or expired got back in to the tune of 1,013, which is about, what's that, almost 500 more than normal? 400?
300. Well,
So
200.
that's a pretty big number. When you consider that 1,000 homes were off and now they're back on. Now, how does that happen? Well, first and foremost, you were listed to the realtor. The realtor didn't get the house sold. It's their fault. I'm changing realtor. So when the listing expired, they went listed with another agent. That agent will miraculously sell the home because he probably had a very firm conversation. Well, you probably weren't priced right, and they get it priced right and it sells. But that's normally how that all shakes out. So, but what that tells you, it tells you that there's 1,000 people there that really want us to sell their home. Now, that doesn't mean a lot in the scheme of things, considering we've got 25,000 listings out there. But that's 1,000 people that took their home off the market or let their home expire, but they're going to give it another run.
Yeah.
And we see this pattern of trying and listing and changing realtors and moving to another agent during times when prices are going down. And so this is a real strong signal that price declines have not finished yet. In fact, they're just getting warmed up, in my opinion. And I'm going to show some other numbers to support that. Doesn't mean that they're going to come rolling down like crazy. In fact, in some of the numbers that we're seeing in the Cromford data that came out for last month, the resale median sales price was 471, up 2.75 from May of last year and up 3.9 from April, which is kind of surprising.
Mm-hmm.
And new home median sales prices rebounded a massive 7.2 from April, while resales also rebounded by only 3.9. But what I'm seeing is existing listings. Well, I'm going to show, I got to pull it up here. I kind of had things kind of go out of order here for just a minute. Let me jump to this. You've seen the headlines that say listings have exploded,
Soaring.
Any other big adjectives to describe our market?
Pretty much. I've seen it. Yes, the soaring. By the way, we still got that. We still have that that little buzz come, that little fuzz coming every 15, 20 seconds.
Oh man, that's going to ruin this. So
Yeah. Oh,
I apologize to everybody. I don't know why that's there.
yeah. I just want to get ahead of the curve there.
if I were to completely reboot my computer, it would probably make it going on. Your
Yep.
mind
There's
making cracking noises.
about every 15, 20 seconds. Just
Yeah,
like anyway, we'll
try a
try to play through it.
try a couple tricks here and see what I can do. Bear with me. It's a software issue within StreamYard. So
It only happens every couple times we're broadcasting.
yeah, it does. You know what we can do?
Just stop the show forever.
Yes, we will just never come back. Now I would say I'd start over, but sounds like you're dragging paper across the mic.
Yeah.
That's got to be irritating for people. So, well,
But just
I'll see if I can do something about it post production. Bear with me here and see what I can do. I tried something once before. It doesn't sound bad to me right now, says Debbie. Thank you. Hold on. Watch me do something technical here. Watch this. I'm gonna. Can you turn it off? Turn it back on again. There, I unplugged the mic and put it back on.
I'll see
John,
that works.
John Doe says perhaps some of your studio equipment needs something called ground lift. It may mitigate the interference. Boy, send me a note on that. I'm all as much as I. It's not obnoxious by any means. Thanks, Joe.
I think
John.
the great content that we're providing is going to override any type of distraction that.
Yes, that's it. That's it. I'll try not to say. Blah, blah. Okay, so here's where I'm going. So to go back to where we were, and thank you everybody for your comments there. Listings soaring. I wanted to put this into perspective. Yes, they have gone up, but here's all the listings from 2005 to today. And where are we? We're right here. So a more likely headline should say, active listings in the Phoenix market have returned to their normal state. However, sales have not. We're right in the middle.
Yeah.
Now, as I've been touting for a while here, I'm going to remove all these other years. And I said that I don't expect to see listings spiking up this summer. And I expect to see them take a seasonal downturn. And we are seeing that. Let's get rid of the silly years here. See how we kind of went down. We went up a little bit.
Yep.
Now we're heading down. We're going to be down again this week. Those numbers will show up next week, probably by about 800 homes. So we're not going to see a spike in listings rolling into the summer. Something's going to have to change for more homes to come diving on. But let's face it, we just shared some numbers that showed that we had all these expired listings and then people are putting back on the market. That's not adding to our inventory. And you can see here with this chart, Pat, this is accepted contracts versus back on market. This is showing back on market from last week at 346. This is going to be right up here when this chart gets updated next week.
Oh, wow.
Okay. And you can see that these active listings or back on market listings are going up at a time when accepted contracts are coming down. So yeah, you're going to see some pricing pressure. There's no doubt about it.
Yeah, definitely. I mean, obviously that just is going to lead to a little bit more softening. I mean, how much?
Well, it's showing up here in the asking price. People are starting to lower their asking price now. They have to. It took a while for us to get there. We came up the first of the year, kind of flatlined, people holding out. Summer hits. Okay, let's get serious here. So starting to see that. And then the other thing that we're seeing is the listing success rate. That is not going in a favorable direction if you're a seller. However, there are some markets where sellers are not having a hard time. Now we've got the Crawford Market Report. This isn't the one right here, but this here. We've got all the numbers. And the reason I showed this is my weekly newsletter. I send this out to you on Monday morning, so you can really take time to do a deep dive on that. But this is where we're at. Fountain Hill's getting a little better for sellers, probably because they have fewer listings because it's summertime. Chandler, again, is continuing to erode. Look how far Gilbert fell. They're no longer considered a seller's market. And then you get down here to Buckeye and Maricopa at 53.9 and 53.6. Those are clearly advantage for buyer's market.
Yeah.
And speaking of Buckeye, have you ever seen the city boundaries for Buckeye?
No, I mean, I think they're quite large, if I'm not mistaken.
Yeah, it's. I'll show you. It's like up, over, up, down here, all the way down through here. Little pockets come down
Now
way
that
down here,
Buckeye is south of the I-10 as you're going toward LA.
and up here. It's like you took a preschooler, gave him a red marker, and said, "Hey, Timmy, draw a city." So
It kind of does.
the reason I point that out is if you see data about Buckeye, take it with a grain of salt. You're going to have to do a zip code search because you got Buckeye that's way up there and Buckeye that's way down there. In total,
it's like Scottsdale. Scottsdale is like 20, what was it, something like 25 or 26, 27, 28 miles, long, from North Scottsdale to South Scottsdale. I mean, it takes you 35 minutes to go from 35, 40 minutes to get from top to bottom practically.
Yeah, and that's what the freeway in there. Cromford Market Index on a daily basis going down. But I wanted to talk to you about this, Pat, because updated delinquencies, foreclosures, and REO. This is from a gentleman named Bill McBride with Calculated Risk Newsletter. I get it every morning. He's saying we will not see a surge in foreclosures that would significantly impact house prices as following housing bubble for two reasons. Mortgage lending has been solid. Most homeowners have sustained equity in their homes. Now, been getting a lot of pushback. People, foreclosures are coming. Here they come. And the other thing is there's shadow inventory. The FHA's got millions of homes out there that they're going to flood the market with in August. And I've asked, send me that report, send me that data. And I'm still waiting.
Well, there was a shadow inventory argument back in like 2012. Yep. You literally took the year out of my mouth. How'd you know? But there was that same argument, and obviously we've been talking about that on the commercial real estate side too, for the last 2 years. So, but
sounds like we fixed the sound problem. Thanks, Ernie. So here is Fannie Mae inventory for foreclosed properties. And then here is the chart that we shared a while back where the yellow lines are anything that's 90 days. The red lines are foreclosures. The blue lines are 30 to 60. Nothing alarming there. And what he's saying here, the percent of loans in the foreclosure process increased year over year from 0.46%, 24 to 0.49. Big snoozer. But remains historically low. Loans in forbearance are mostly in the 90-day bucket range. Now, if we talk about shadow inventory and we talk about forbearance started during COVID, right?
Yep.
And what they said was, you don't have to make your mortgage payment and we'll rewrite it later. We'll take this amount that you owe, we'll tack it onto the end of the note, we'll re-amortize and we'll rewrite it. Now, during that period, house prices skyrocketed. Unemployment has been very low for this whole term, running about 3.5% to 4%. So if you did have to rewrite your note, how many of those people in forbearance that may be exiting forbearance now are actually going to be upside down? I don't know. I don't think statistically it'd be enough to move the market.
Yeah, no, I agree.
John has a comment here and says, how can the article say mortgage lending standards are solid when they've literally been approving up to 50 to 55% gross DTI for buyers, many of which are first-time buyers? What do you say to that, Pat?
Yeah, to a certain degree, there's truth to that, but on conventional, it's 49.9. FHA kind of the same. Every client is a little different. You got the DU, you got the desktop underwriting, you got the LP, loan prospect, basically that runs it through the computer. You'll get a refer. There's a lot of times I'm seeing on Facebook posts on mortgage, just different discussions on Facebook and social media that people are like, hey, I've got a guy that's, 720 or 735 FICO score. He's got a back end, front end, back end of 39%, but I can't get it to go. you got to play around with the numbers a lot sometimes with the individual clients, and depends on assets. Fannie Mae and Freddie Mac look at assets and credit differently, even though they're kind of like brother and stepbrother, or brother and sister. So, VA is one that will go up higher, but they look at residual income. 55, I will push against the 55% gross DTI getting approved. I mean, I haven't seen any. Usually it's you start running into trouble over 49. I mean, but even then, 49 is still cutting it pretty close, 45 to 49.
But it's certainly not a big total of our existing mortgages out there.
No, not really. I mean, not that I've written. I mean, typically they've got some room. It's been sometimes, I mean, over the last several years, I've had a few clients that were like, oh my God, if their insurance, if their homeowner's insurance comes back, $25 or $30 more, we're in trouble. And I alert agents, I alert the client, I go, hey, we're tipping the scales here. I mean, you got to make sure that you got, there's a lot of work that goes into it. Try qualifying. I mean, you get those clients that are really on the edge. I've had some people that, I've talked to and said, hey, you got to back off and think about maybe buying something a little bit lower priced, that backs you off a little bit.
Yeah, you don't want to be that close.
No, you don't want to be that close. I mean, some people really do want the house. They'll push it, but I just haven't seen 50 to 55. For the most part, you're going to be dead in the water. I mean, but what's the difference between 47, 48, 49 and 50, 51? I mean, you're kind of splitting hairs, honestly, on the monthly payment. So it's
David here's saying many people have done forbearance multiple times, and they're all ending in September. Forbearance and workouts. So I guess we'll just wait and see how big that number is, and if it's a big impact. I don't know. And that's
kind of like the Fed. You listen to Jerry Powell, and he's like, "Hey, we'll just wait to see what the data says." He doesn't know. I mean, when you hear his speeches, he's like, "Well, let's just see what the data says." Okay, thanks, Jerry, for all that direction.
Thanks for your in-depth analysis.
Thanks for your in-depth analysis. I could have told you that one.
And we're still not doing much. I mean, the jobs numbers came out; they were pretty anemic, and it still didn't move the bar, did it?
No. I mean, it made it to the positive. I mean, these are prices, which obviously prices as they go down, rates go up. We've been kind of all over the board here this last week. They did improve, earlier this week. We saw a nice little run, but then, the ADP numbers came out. They're anemic. I mean, we're waiting for the BLS numbers to come out tomorrow. So, once again, you look back at I look at this chart, this 1 year chart, just try to stretch it out. And it's amazing how, I've said this ad nauseum. I mean, you start here, draw a line. We're pretty much where we were a year ago. And, look at all the news releases and the news that came out this last year with inflation, the CPI, employment, the tariffs. We're pretty much where we were a year ago. So we've been stuck in this channel. I don't see anything. We're going to see the BLS, the job numbers come out tomorrow. Who knows what they're going to look like? Because, I saw this little write-up from this one other guy who does rate write-ups. And he just laughs how he has this warped sense. He says, I get a warped sense of humor. He goes, there's this article that came out, says economists raise questions about quality of U.S. inflation data. I don't know I don't know if that was where that came from. Wall Street Journal, they were questioning the BLS data, which obviously I've always questioned the BLS data anyway. So it's the market, I think, is the last couple of years, it seems like it does distrust this number because they always revise it. So, but there's nothing, really in the horizon that's going to really, rates might go up a little bit, but we're stuck in this range. Right now we're sitting at, probably, once again, we're sitting at about 6 3/4. It's pretty much par for, 5% down, 400, like you said, the $475,000 purchase, 5% down, 780 credit score, 6.75 range. I don't think it just seems like every week the data comes out, it moves the bond market maybe 20, 30, 40 basis points, and comes out the following week and we're back down again. There's no sustained trend to say, okay, hang on to this train because it's going to be going lower, and
Yeah, it's our average weekly sales right now since Memorial Day have been pretty tepid, and I don't see anything that's going to go, okay, we're getting back in. It's just not there. So some of the social media posts I see, July is going to be great. You're living in la la land. If they were in forbearances from Debbie from the pandemic, what happens if they rewrite now with rates so much higher than they were 4 to 5 years ago? I'm going to guess that
they
if
don't
anybody's
rewrite
still
it.
in
I mean, I don't.
forbearance now, they probably did rewrote it maybe a couple times. I don't.
Well, honestly, I'm not an expert. I mean, I had very, very little, if any, experience in the forbearance era or the area. They're just what they basically do is just play around from what, like I said, I haven't had a lot of experience. Thank God, knock on wood, yeah. But back in 2010, 11, 12, it seemed like you're an expert in all that short sales and foreclosures and all that. But they pretty much just play around with the payment. They're not. I don't know if they're going to rewrite the note in terms of the rate. Like you said, I'm kind of speaking up because I really haven't had too much experience on that. But I think they just play around with the payment. Push it to the backside, reduce. There's a lot of a lot of things they can do to kind of work with you.
Well, here's our pending sales. I was saying it was pretty slow, right? But we're right at last year, but we're just barely, like last year we had 5,015, today 4,802, so we're down. But new listings are also down. I track it on my 7-day moving average, and there's nothing showing that here come the listings and here come the sales. The sales are going to stay right where they're at now, at about 2,700 to 2,900. New listings, I don't see them popping up above 3,400 again anytime soon. I just think it's going to be
more of the same.
Wait. I mean, people wait seasonally. I'm waiting until after the election. I'm waiting till spring. I'm going to list after summer. And so now September and October is really the unknown here for all of us.
Yeah. You and I talked about that. I think, you and I talked about that a couple of days ago. I just don't see a hell of a lot happening from now till, September, end of August, September. I mean, they're talking about the Feds maybe moving their rates a little bit, but once again, the Fed, they move the rates. It just, what they do just seems like it's been inconsequential in terms of what the mortgage, market is in terms of 10-year. But I just think, September, October, the longer, as I told you the other day, I said, the more we're in this malaise, this muck, this summer, this last year muck, it just seems like there probably is maybe some, for lack of a better word, phantom pent up demand. I don't know if phantom is called the word, but people are eventually, if rates do get down, if they do, the tariff talk, like you and I talk about offline, I just feel like it's going to be a nothing burger.
Well, I describe today's market as this: the desire is there, the ability is not.
Yeah.
So in other words, I can't afford it. I need help with affordability, and rates are not helping. Prices are not helping, although prices are showing signs of improving. But I'm going to wait a year. Well, then you got kind of have to measure it quarter by quarter and see if there's anything out there that's going to change the direction of where you want things to be. And if you're a seller, I mean, back in the end of August last year, I was saying, I think I would list in September and October because it's always slow in November, December. So I'd list it now if you're seriously considering selling, because I don't feel that January is going to be as hot as some people say it's going to be.
Mm-hmm.
And so I was pushing that really hard in September, and January is actually, February was even, statistically worse than what I thought it was going to be, but I'm not alarmed by it. We're seeing numbers that are showing softening, and it's going to continue, and we're going to have to, things are going to have to change on both sides of the equation. Either the affordability, prices come down, and that could take another year and a half.
Well, it could take another 2 or 3 years. I mean, honestly, there's just not a lot of data. A lot of in the data it says that we're going to see this crash. Obviously, you got expectations saying home prices once again. They say the home prices might be off 1-2%, but once again, $500,000 home, 2%, 10 grand. I just, like I said, we see these words being used like soaring and crash, and it's like, stop it, people. Jesus. I mean,
New listing soaring. Okay.
Yeah.
Well,
Yeah.
All right.
Well, you know what? Once again,
Channel 12 is where I saw it.
It gives people, once again, said it a million times, gives people, do you want to be, once again, I've said this how many, 18, 19, 20 times the last couple of months. I mean, do you want to be, once again, 2021 going up against 15, 20 offers? Or, you got to sit down realistically and say, I don't want to be against 15, 20 offers and the prices, offering 20, 30,000 more over offering price. We're not in that market. So once again, if you are in a position, take this next couple months to put yourself in a better position. If you can pay off something, credit card, just tighten up some things, so this market's going to giving you, it just feels to me, Mike, just looking at it psychologically, it feels like there's a little bit of buying demand building up that they do there. Like you said, there are people out there that want to buy, but the affordability is still a problem. But once again, we'd have to see some major ass changes for it to, say, oh, okay, this is a great buying opportunity.
I'm working on artificial intelligence, for me, but no, I'm working on adding artificial intelligence to the premium section of my newsletter, so that when you click on that tab, you can ask anything you want about the Phoenix real estate market, and even if you want to ask about a particular house. So I'm working on it to tie it together with the multiple listing service so that you can get accurate data and market reports. And so you can just get in there and ask it anything you want. And if I hunker down tomorrow behind my computer for most of the day, I may have it ready for next week, but chances are I probably won't. But that's my big goal, because the current newsletter we got right now just shows some buttons here, price, mortgage, contact the team, search for homes, request a home valuation report. I have a foreclosure tab, which is the most popular button on my newsletter, believe it or not. Fred data here, Federal Reserve data. And so I'm going to add that. So if you haven't subscribed, use the link below and get ready for that. That should be fun stuff. There isn't a whole lot changing next week. There isn't any big economic data coming out, probably just more.
No, there's no CPI. Next week, we got the CPI numbers coming out. We got them coming out on Thursday. So it's going to be interesting, because obviously the last couple months behind the scenes, it just feels like behind the curtain. Supposedly these numbers have been, kind of on the lesser side, for lack of a better term. So it seems like we're not getting, we get the core CPI numbers coming out in May. The year over year, the previous was 2.8. I don't know what they're forecasting. It's still not out there that I see on this on my MBS Live website. But yeah, that will be producer prices on Thursday. They said CPI on Wednesday. So once again, we'll see if that obviously reacts it. But once again, probably just react rates into kind of the same range that we're seeing here.
Well, the bond market's the story of the day. I mean, they're worried about the debt. There's a lot of chatter about the debt, how the CBO is scoring it. Things are putting in, things are leaving out. And so there's just a lot of noise.
Yeah,
and the market's saying, I don't like uncertainty, so I want a better rate of return. So they're walking away from bonds. Japan, their debt to GDP is 225%, I believe it is, or 250%. And so they're not going to be purchasing as much of our debt as they have been. China's backing off. Their debt to GDP is 300%. Their real estate market's in big trouble. So we sit here and look at ours at 120%. It was 124. It actually went down a little bit. That seems like nothing compared to, we're giants amongst little people, I think is what
Yeah.
so, but that's, that I can't even get into that scenario and figure out what's going to go on. So, but we'll pop back here next week and want to let everybody know, for me, personal news here, that those of you that have kept track, I had my follow-up doctor's appointment today, and my doctor, or Monday, and my doctor informed me I can now consider myself cancer-free.
Congratulations, buddy.
Thank you. That's yes,
awesome.
I said that was a spring that I hope, winter and spring, I hope not to repeat. And he was on his way out the door. He turns around, he goes, well, you did it. You're done. Go forward. So it was a great doctor's appointment. It was
because I definitely couldn't do the charts like you doing, buddy. Need you.
Well, it's a fun hobby, and it's fun seeing. Yeah,
I think we lose a lot of subscribers. They kept just looking at my sorry ass face, my face for radio.
Yeah, well, that happens. But I like seeing the names. The names we see. They're always familiar. Debbie, John Doe, Ernie.
Yep.
Dave.
They're all good people.
That's the fun part about getting on here.
I love, I've talked to several people. They're all good people, and really enjoy what we've done the last several years. So.
I'm having coffee with a gentleman tomorrow morning at 9:30 in Gilbert. We're just going to shoot the breeze about real estate. Thanks, David. Feels good. And Harold, amen. Just live, Rick. Yeah, you got it. So I went up to Strawberry just for a couple days, just to Pine Strawberry area. I don't know if you've been there, but man, it's really
my
cool.
friend's got a cabin. She rents a cabin up there. Yeah, it's beautiful.
Yeah, just went up there to
people
celebrate.
I tell you, people want to get out. It's only an hour and 20 minutes out of Phoenix, and it's just crazy. The topography changes that area. It really is a cool little area. I mean, you're not that far from the city. Hour and 20, 25 minutes from Mesa. It's not that bad. And it's really cool. So,
yeah, and if you're leaving in Mesa, I recommend you just drive up Power Road and go up the Bush Highway.
Yeah.
It goes right along the Salt River and stuff. I mean, that's a beautiful drive. Instead of going up, I want to say the
87?
Up the 87 and then hooking up, up by past McDowell. I mean, just go up Power Road. There's hardly any stoplights, and you're just winding through this area by the river. You got the mountains on the side. You're just driving like this. Wow, this is beautiful. Phoenix always gets hammered.
Keep your eyes on the road, Rick.
Stucco houses and all that stuff. Yeah, well, you obviously haven't driven up.
We don't want you. Yeah, we don't want you. You're not going to be dying from cancer. You'll be dying from driving your car off the road.
Oh, I've been up to Payson a million times. I love it up there. I'm going up to Flagstaff with a buddy on June 17th. We're going to go up to that RV park and just kind of chill for a little bit. So he's flying.
Yeah, I'm waiting for the invite, but I guess I haven't gotten it. That's okay.
Yeah. Oh, I emailed it to you just the other day. I don't think I have your email. It's
it's okay. I'm probably tied up that weekend anyway.
Yeah, same old thing. I get it. So, well, look, Pat, good to see you again, and we will chat, I'm sure, like we do over the weekend. For everybody out there, for our millions and millions of viewers, thank you for chiming in, and thank you for the well wishes and the congrats and everything. It means a lot. Everybody have a great weekend coming up.
Take care of the millions of us. Thank you.